Hello everyone and welcome to another Elliott Wave forecast intraday video day. My name is Eric. Today is the 10th of December around 2:20 p.m. Eastern Times. And as always guys, here we go with another technical video or intraday video in which we're gonna try to explain the view of the market. In yesterday, we did a video in which we covered the S&P 500. And yesterday trading, we were calling the S&P to do a running structure because honestly speaking, we are not calling, we're trying to be as perfect as we are, as we can be, I'm sorry. And honestly speaking, we didn't like the top that the way structure in the last swing of the S&P. With that being said, we knew that we were trading into the blue area. We knew that. But we believe that still there was a possibility yesterday that this was a running flat from here in the way that this is 3 and then 3, A, B, and C, and that we're gonna break a high for one more time. We understand in Elliott Wave forecast a concept that is called Elliott Wave edging, which is a concept that when there is a moment in which the bulls and the bears align in one side of the market. This structure over here, we didn't like it yesterday to be the last leg. So at that moment, we thought that it was 3, 3, and 5, and that this was a three-way, but there was a requirement that we couldn't break below the yesterday low in order for the top not to be in place. Now, the market today did the worst case scenario. Why? Because if you bought it yesterday with our advice around this area, technically speaking, you should be break even or being bought in this area. That's the consolidation. But the S&P in our system have taken a series of people in this sequence, which is telling me that most likely the sequence is completed. With that being said, we believe that there is a risk at this stage that we're gonna see the decline in the wave forward that we were expecting. We don't only look at the S&P, we see many instruments around the world, and that's why we've been tweeting the charts of the Nikkei, the one that it reached our area for a year and a half ago, and it reached the area, and we need to be careful. So, I mean, whatever people like to buy the S&P at this area, I believe that it's going to be choppy, like it's in the process of rolling down or rolling over, and we need to be careful with the loans and risk for a while. Not that it's going to be the end of the war or the crash, I don't think so, but a big cycle is ending in the market, and we recommend that everybody stay a little bit outside. Our account in the S&P has been the same one for the last 2.5, 3 years, and it's working like a machine. So why not? Why not the way for happening and some profit taking here? Okay. So as always, Elliott Wave forecast there to provide the buyers as the best as we can, and hope that you guys enjoy the video and that you guys understand that we are not here in the game to be perfect, and that we understand that when we run, we run. Yesterday we played the agent for one more high, we run. We are not those type of servers that they only show the one that they're right or they are afraid. No, we gotta run sometimes. We've been warning members over the last few hours or few days that the top is near, and when the top is top, if you run, you run. I would rather get it right 9 times and one run than being a picker at the end of a cycle. Okay? Thank you guys. Or as always, everyone welcome to Elliott Wave forecast. Thank you guys. So.